Welcome to the Mastermind, everyone, today. Today we have Richard Wilson, president and founder of Family Office Club, who will be giving a presentation on how to close deals and influence investors and his methods to close deals. And then we have Badri on our session today as well, and he's going to go through dealing with investor objections. So it's a good combo today, how to close deals and influence people, and then also talk about, well, how do you deal with, commonly asked objections as well from your investors. So I think it'll be a great presentation today. So without further ado, I'll pass it over to Richard. Please, give your little intro for those who are just meeting you for the first time, and I'll pass it off to you.
Sure. Yeah. My name is Richard C. Wilson. I started an investor club in 2007. I've been running that now for 17 years, and we've hosted over 275 live events. We have a 20-person full-time team helping us run the investor club. We have about 7,500 investors registered with the club. But before I even started the business, I started studying the science of influence and persuasion. And it was through studying that we really launched our investor club, scaled our investor club. And if it wasn't for the influence and persuasion strategies I'm about to share with you today, I think our business would be a fourth of the size, or maybe we would not have survived. We maybe would have gone out of business. And so the strategies we share here, there's just about 20 slides. They've made us millions of dollars. And I hope that all of you get a ton of value out of sharing this. So I'll move pretty quick through these, but feel free just to stop me if people have questions. Happy for you to interrupt me and clarify a point, or we can emphasize something. But this is what's worked for us in the investor space. So I'll share my slide here. Probably take a second to pop up. There we go. So let me know if anyone has trouble seeing it. But this is about how to influence investors, how to win deals. This is my thesis. After I had my MBA, I was living in Boston raising capital, and I studied influence and persuasion through the Harvard ALM division. And I was taking all these psychology courses, and I was the only business person. Everybody else was a psychologist or a psychiatrist. And I was like the evil business person trying to figure out how to use this stuff in the real world, besides therapy, obviously. And you can see at the bottom of this page that part of my thesis was basically on Robert Cialdini's influence principles. So that's kind of the foundation for all this. And I started learning about all of this back in 2007, and my thesis was in 2009. So it's been quite a while studying influence. But what is influence? It's basically, how do you get people to say yes to you? How do you convince your wife to go to the sushi place you want to go to instead of steak? How do you convince your kids to go to bed on time? How do you convince somebody to invest in your fund? And importantly, the academic field only approves scientifically proven methods of influence. So there might be some things that we all know work in the sales industry or the sales world, but the study of influence and persuasion is really saying what is scientifically proven to work over and over and over again across a wide variety of people. It pretty much almost always works, or it gives you a better chance of working. And so it used to be that someone could claim to be an expert on a lot of different topics, right? Look at Leonardo da Vinci, or and somebody who lived in the 1800s, John Stuart Mill. He is the last person ever to claim to know everything about everything. And that's such a ridiculous claim nowadays. No one would ever claim that, right? Like Elon Musk doesn't say, I know everything about rockets, because no one person does, right? And so the amount of cognitive overload is greater every year. It used to be that knowledge doubled every 15 years. Now knowledge doubles, last time I heard, it was every 2 years. It's probably even faster, who knows? The other way to say it is that there's over 400,000 scientific journals published every year. No one person knows everything in any one scientific journal. So there's no way to be an expert on all the stuff being thrown at you. And if you're an investor, you are very busy. You have dozens or hundreds of employees, perhaps. You probably get dozens of K1s, have dozens of LLCs. The amount of information coming at you, if you are a founder who's very successful or an investor, is a lot, right? And so if I recommend a book to you right now, Are you going to go to Goodreads and read 19 book reviews, ask on social media who's read that book, ask your best friends, do research on Google? No, you're either going to say, oh, that book sounds good, look on Amazon, it's got a good review, buy the book, or you're going to move on with your life and not even write down the name of it, right? You have to act very quickly. The busier you are, the more you have to rely upon shortcuts. Like, do I trust this person who told me to do something? Do I trust this review online? And you make a very quick decision. The busier someone gets, the faster, the more that influence and persuasion principles matter, because you have to rely upon shortcuts to survive the day. You can't investigate every little decision you make, or you won't get anything done, right? So that's the basis of influence. The reason you want to study it is that, first of all, in the investment industry, almost nobody talks about Robert Cialdini and influence and persuasion. Also, every time you write an email, you're trying to get someone to respond to you or get on the phone call. Every time you write a one-pager, which hopefully you have and not just a pitch deck, you're trying to get someone to review your pitch deck or get on a call with you. The whole point of any piece of investment marketing materials is to gain interest, gain traction, get a meeting, move them to the next step forward. And so if you know these strategies, which you can literally study your whole life and always get better at, it's just going to make you more effective at communications. This is just an example of how many different pieces of materials can be dialed in, from your one-liner, the name of your company, etc. Could all be done in a way that's more influential than it is right now. It could always be improved. So I was lucky enough, after studying Robert Cialdini for the last 15 plus years, last week I got to interview Dr. Cialdini for the first time, which was pretty cool. His team had reached out to us just by chance because they found we were an investor club and they were raising capital for one of their training programs. And I said, oh, I'm like a huge fan. I'd love to interview Dr. Cialdini and put it out on our YouTube channel. So I was able to do a one-on-one exclusive interview with Cialdini. He is basically the foundational expert, the preeminent expert of the whole field of influence and persuasion. Many of you may have read his book. He's sold over 7 million copies in 44 countries of his book called Influence, The Psychology of Persuasion. And he has 6 principles in there, and I mentioned in a couple minutes. But I got to ask him a lot of really pointed questions I'd always wondered about influence and persuasion, straight from kind of the godfather of the space himself, which was super cool. And so one question I asked him was, like, after studying this for so long, like, what is the master key to influence? Like, what is like the one thing that if Badri's group here from A-Vester is watching this webinar, they don't remember another thing that I said the whole webinar, what's the one thing they should for sure do? And Cialdini said that it is to have an ethical reputation. He said, if you do not have an ethical reputation, nothing else you say or do matters. And I had never talked to Cialdini before, but at all of our events, I start out telling people, it's not the person with the best IRR written on their paper. It's not the person promising the most high, ridiculous returns that's going to win the day here in our investor club. It's a person that builds the highest trust, the highest conviction, builds the best relationship. People want to invest with the best people with a compelling, unique strategy, not someone who promises the highest returns. That's sometimes what new people to the space think. So I loved his answer. It totally makes sense. And in all of Cialdini's teachings, he says it's about ethical influence and persuasion, because otherwise you look like a used car salesman and it backfires and nobody wants to do any business with you because you look manipulative or you're faking something to have in common with someone. So I just thought, having an ethical reputation was a really interesting takeaway from him, and worth mentioning here for you guys today. I also asked him 2 other really critical questions that I thought were, $100,000 insights. I said, what is going to make the difference in the world of artificial intelligence and technology and deep fake media? And you can't even believe your own eyes anymore, whether it's a picture or a video, doesn't matter. It could just be fake easily, right? And so in that world, what's going to make the difference? And there are scientific studies done over and over again that show, not just in the investment industry, but just in sales in general, and this is not in the world of AI, this is before you couldn't believe anything that you see, that 16 times, people are 16 times more likely to move forward in a transaction with you if they've met you in person and they heard the pitch in person. Just imagine if you're going to buy a hamburger through Uber Eats, or if you're going to get married, which one do you think is going to hold so much weight that you may want to meet in person with that person who you're about to marry or sell you that hamburger? Probably if you're going to get married to someone, you'd love to meet them in person first, right? So my point of that is that the more, what was that?
Hamburger. Scott, you got to know who's cooking that burger.
Yeah, it depends on how much of a burger connoisseur you are, I guess. Yeah. So basically, it's like the heavier weight the decision, obviously, the more you're going to want to meet the person in person, right? I mean, like, it's just common sense. I don't need a scientific study to tell me that. For all of us founders, we know that. But also, in a world where everything could be fake, probably want to meet in person. So my thinking is that in the investment world, I don't have a scientific study to show it, but I would guess it's 20 times more powerful or 50 times more powerful to meet in person. So we are going to continue. We've got 16.5 million social media group members and followers behind our brand, but we're going to keep hosting in-person events for as long as we possibly can for the foreseeable future, because we think it's the combination of having a big digital reach, but meeting in person, which is super powerful. And Badri's been to some of our events, and it just makes a huge difference meeting in person. So when I was back in Oregon for Christmas last year, we got a hemp milk latte with Badri and got to meet him in person, and just wanted to, actually get to know him as a human being. And I think that's going to keep on becoming more and more important. So that was interesting to hear from him. The other thing is, I said, if you're approaching ultra wealthy families, centimillionaires, billionaires, the busiest people on planet Earth, like heads of state, et cetera, what can you do to get a response from investors or catch their attention? And Cialdini said that they've shown that people who are very wealthy are very successful, and they believe in themselves. They have conviction, and they rely upon their own judgment because they've learned they're pretty good at making decisions, and that's how they became successful. And so looking at what they've done before and being consistent with that, and looking at their actions and saying, okay, they always like to structure deals like this, or they always like to invest this amount and then a higher amount, or anything you can find about types of deals they've done, and then explain what you're doing in a way that's very much in line with what they've done before, then that would be something that they are much more likely to be influenced by, because they trust their own counsel. They are still influenced by the counsel of people that they see as authorities, but not as much as someone who has no idea what's going on planet Earth and doesn't have success yet. They trust their own counsel more than the average person. So those are just some interesting questions I got to ask Cialdini directly that, I've been presenting on this stuff for over a decade at our events, but I never could quote a person directly exclusively. It's just a picture of people meeting in person at one of our investor club events. We host 16 events in person each year, masterminds as well as investor summits. And our next investor summit, we have 4 billionaires on stage and 120 speakers total. This is one of my 2 favorite books from Cialdini. It's called Persuasion. And essentially in this book, he's providing over 50 examples of ways that you can shine a spotlight on something. So somebody's prefrontal cortex puts a outsized importance on one fact or area, and then when you're bringing up your presentation later, it's going to influence their perception of it. And so, for example, if somebody does do deals in a certain way as an investor typically, and you learned through someone or somehow on past investments somebody has made, then talking to them when you're first getting to know them and bringing up like, oh, I saw you've done 3 deals in manufacturing before, or in whatever niche you're in, and bringing that up and how those were structured, and just confirming that you got your facts right, but also just bringing it to the front of their head. Now, if you bring up your deal that's structured in a similar way, they're going to link those 2 together even faster than they normally would. Another example of persuasion is if you add big value to someone and it's going to help them make $500,000, you don't say, well, we're not going to split that. I'm not taking 250,000 of the 500,000. Our fee for doing that is actually only 25,000. And then saying 500,000 first, and then 250, and then 25,000 makes the 25,000 seem much, much smaller. And that's just another form of persuasion, is influencing what's coming next by saying something immediately before it that has the brain, hyper concentrate on a certain area, fact, or element. Another thing that boosts credibility and influence is pointing out what's not perfect. If you pretend like there's no chinks in the armor, well, then someone's going to look for one and they're going to think you're trying to deceive them. And so it's scientifically proven that there's always a negative. Like in our investor club, we're not doing one-on-one matchmaking, and we're not doing, we're not doing cap intros and raising all the money for you. If we did, we'd be charging $30,000 per event, not, 3 to 7K, for 6 months or a year membership, right? And so the benefit of that is we don't have to charge $30,000 per event, but we also are not like your capital raiser full-time or your broker dealer, placement agent. So, but admitting what the negative is up front allows people to not only understand it better, and full disclosure is always best in the investment world, but it just gains trust because you're not acting like you're perfect. When someone says they have no competition, there's no downside, there's no risk to this deal, it's the best deal you've ever seen, like people just are kind of like, all right, let's just end the conversation. I need to go take a phone call or something, right? That's just, investors smell amateur hour when they hear that. They just blatantly don't trust it. So this is the book I mentioned earlier. It's kind of the foundational book on influence. If you haven't read this, definitely encourage you to pick it up on Audible. You can see the 6 principles here on the screen: authority, commitment, reciprocation, similarity, scarcity, and social proof. Some of these are pretty obvious and been talked about many times, so you're probably familiar with scarcity or social proof. But the more you can build yourself up as an authority that people look up to, the more powerful subconsciously what you say, like it has a heavier weight to it. They've shown that in different environments, different people have levels of authority, such as speaking on stage at a conference, for example. And they've shown, for example, in the world of medicine, if you're in a hospital wearing a white doctor's kind of lab coat looking attire, people treat you differently. And they've even shown that trained and experienced licensed nurses told by someone who's not a doctor, but they're in a hospital with a doctor's lab coat on, and they've never worked in that hospital before, will walk in and tell a nurse to inject 2 chemicals that every nurse should know are lethal into a patient. And there'll just be a saline solution inside the needles. And more often than not, the doctor can get the nurse to inject the patient with what would be a lethal substance simply because he's wearing doctor's clothing. They don't recognize the doctor. They have never met them before. They know it's lethal, and they still do exactly what the doctor says, right? And so that's just one example of authority. There are hundreds of scientific studies behind each of these scientific influence principles mentioned here. And number 2 on commitment is related to what we said about getting the ultra wealthy who believe in their own counsel to do business with you or to work with you. If you do things that are in line with how they operate, then you're more likely to gain their approval and gain momentum. I'll stop right there to see if there's any questions. I've got some more slides to go through, but anything that I moved through in these last couple slides that somebody would like to ask about?
No, I'm familiar with the books, and
Okay.
agree with you 100% that these are great principles to follow. It's very, very difficult. At least for me, I'm like a mule. You got to hit me over the head many times. But that's the power of going back and rereading it, and quite frankly, practicing it. If you don't practice it, it's really hard to make it part of your everyday being when you're speaking to other people.
Yeah, for sure. And one thing that Cialdini said, because I told him my favorite influence principle is a combination of scarcity and authority, and try to make myself such an authority on a niche topic that I'm a scarce resource, and they don't know of any other authorities more in depth of an expert on like how to start a family office or something of that nature. And what's interesting about what you just said and how Cialdini responded to me, I thought he was going to be like, oh yeah, that's really smart, Richard, good idea. Or like, here's another one that's a good combination. Instead, he said you should not have a favorite influence principle of these. He said you should just go into an environment and see what objects are naturally in that environment, and not fabricate or push a scheme on every situation you go to. Otherwise, it's like you're running around with a hammer trying to find nails. He said instead you should just enter a conversation and then see, oh, commitment, consistency. Oh, there's some natural scarcity because I only have room for 4 more investors. So I might as well mention I only have room for 4 more investors. And that's a natural scarcity, not a fabricated fake scarcity. And he said, that way you're being genuine and you just use the one that's strongest in your environment. If you're going water skiing, a pickaxe for the mountains might not be the best, right? That was his response, which I thought was kind of helpful because also related to what you said, you can study just one of these principles. I became more obsessed with authority and scarcity combined for a long time. And the rabbit hole goes so deep, right? It's like, you can just there's so much to learn about just even one of these, Any other questions or comments on these?
No, I like your point of don't try to force fit something, right? I mean, I think that's a very important point. I mean, I think you need to understand the environment you're in. And if somebody doesn't respond to high pressure things, trying to push a scarcity thing might not be the right way to go. Even in the sales thing, right? I mean, sometimes, okay, you have 24 hours to sign this might work, but sometimes that might actually backfire. Hey, this guy is very pushy. Right. Just to give an example, we unfortunately had to replace our heat pump. Worse things can happen. And two people, one guy said, hey, this is the price. If you want to do it, you can. I can't do it for a month and a half. He was genuine about it. And then this other guy comes and he gives me three prices. If you do it within 24 hours, this is the price. If you do it right now, this is the price. And if you do it within 48 hours, this. My wife completely said, we're not working with that guy. I don't care how good his company is, So.
Yeah, for sure. When there's a fake emergency, we were trying to get this domain name for one of our hospitality clients and we wanted it. But then they tried to create this fake thing where you have to buy it right now. And I was traveling that day to Bali or something. And I was like, forget these guys. I don't even want to get it from them because they're so weird about it. So I think that's a really good point. Any other comments or questions from anyone?
Yeah, I have a question. And the question is that I just came in late and I want to know what of these services that you're talking about are provided to us as new members of Investor. What do you provide us?
Yeah, sure. Well, we have 1,000 videos that are free on our YouTube channel. It's called Centimillionaire Strategies. And under playlist on our YouTube channel is our most valuable content because we have a $100 million Rainmaker series. It's like a mini series on there. And each video is just 4 to 7 minutes long. And we have 17 videos providing over 30 different strategies on how to raise a lot of capital. And it's just based on what we've found works while running our investor club the last 17 years. And so that's the number one best free resource to go to. We also have a free book on raising capital at capitalraising.com. Those are the two best kind of free resources. And then we try to jump on here once a quarter to do a webinar just on some of the stuff we've learned while running our investor club and what works in convincing investors to work with us or come to our events or conduct transactions with us. Because we'll do things like we sourced $500 million worth of Marriott hotels for a hospitality REIT that's going public. But we've also sourced 19 deals for a billionaire. But we've also sourced capital and sourced investors for medical practice deals, real estate deals, to buy assets like billionaires.com or commercialrealestate.com. So we've been on the side of sourcing deals, but also helping families start their family offices or raise capital. So that's kind of how we apply this to our world. It's kind of on both sides of the coin.
In case you didn't see the chat window, somebody asked, what is the YouTube channel name? Corey put in the link, including the search query. Thank you.
Oh, awesome. Yeah, thank you. Yeah, just Centimillionaire Strategies. Was there one more question? No? Okay. Here is the short code to the YouTube link right there. There we go. All right, let me get my PowerPoint brought back up here. Here we go. Okay, so in psychology of influence, they've just shown that the way you do something is the way you're going to do it over and over again. Like if you wake up and the first thing you do is brush your teeth and then shave, or brush your teeth and make a coffee, that's typically the way you're always going to do things. We're creatures of habit. And so recognizing that is important to the key to influence, in my opinion. This was not Robert Cialdini's opinion, who knows 100 times more than I do because he's been studying influence for 45 years. So what do I know? But what I've found for myself is that I become much more influential the more I can first influence myself. I've had this saying that nobody will take your investment offering more serious than you take it. So if you don't bother to get a domain name, you don't bother to create a website, you don't bother to have a professional logo, then like, why should someone else bother to take it seriously if you're not? But also, the more that you can influence yourself and be aligned, your words being aligned with your actions, et cetera, then I think the better things go for you. And so, the more you can be disciplined and do the things that you know you need to do, the more you're going to rise above others that know they should be doing some things, but they just don't do them. They just don't get them done consistently. And I think that's one of the things that family offices, like ultra wealthy investors, really look for, is consistency, because they know to be a successful founder and create the wealth that they have, that they not only have to be hardworking, but they have to stick at things and have some grit and consistency to their own actions. So that's part of having a track record and part of looking for people that already have momentum and success in their model. They have shown through many studies that the relationship you have with an investor is more than 2 times as likely to determine whether they invest with you as the features of your fund. So somebody else could be offering higher returns, better collateral, their materials look better, but because you have a better relationship, you get the deal done. Another thing that I think is really interesting is we have had 100 people interviewed within Family Office Club, our investor club, that have all raised $100 million or more. So if you sat down and had a cup of coffee with 100 people who have all raised 100 million plus, we've recorded those 10-minute talks, those interviews and talks within our member portal. And we have found that even people who have raised, like Chip Perkins, who spoke at our mastermind this summer, he's raised $7 billion. And all he does is work as a placement agent to raise capital for people. He has the best CRM, the best team. He's like Cialdini, but for capital raising as a placement agent, right? And so what's interesting is that he said many times during the fireside chat I did with him that even now he has to go and talk to 200 to 300 investors to find 10 who will invest, or talk to 1,000 to find 100 that will invest. And he says it's still not easy after doing it for 25 years. So I think it's good for people on here to hear that. So they're like, why is this so hard to raise capital? Why is it so hard to find an investor? Like, well, it's not always hard. Sometimes you have something and the money pours in because it's a very hot area, hot topic, and everything, the stars align. But most people have a really hard time raising capital, and it takes a lot of work, and you might get it done, but it might be harder than you thought, right? So I think it's just good for people to hear, and the relationship matters a lot. In terms of how we've evolved and positioning our authority, the first book I wrote is on the left here. It's fuzzy. My head's cut off. It's obviously at a conference. Bank of America says there's 6,000 Richard C. Wilsons just at Bank of America. And I forgot, I didn't have my middle initial on the book cover. So, you can never find me on Google otherwise. And so the next time I wrote a book is for Wiley. The cover is more professional. I use my middle initial. I actually had a subtitle to the book. And then we've evolved to doing books that are very clear on who they're targeting, have a subtitle, a better design, have a URL in the front. And just to position yourself as more of an authority, you want to make sure everything you produce is appealing to somebody very specifically and is really dialed into that person and crisp and institutional quality. That will grow your level of authority in your space. Brian Burke is a friend of mine who helped us acquire commercialrealestate.com. It's a domain name that we own. And he came to some of our workshops and masterminds and heard about how I've written 13 books, and books have helped us gain investor traction and investor clients. And it's not so much about the book, it's more about just doing thought leadership in general. But he decided to put a book together, and he was able to raise a record, $25 million in just 4 weeks. And he reached out and thanked me because he said the book was central to that. And again, it's not a prescription to go write a book. It's just that the influence principle of reciprocation means if you give value to someone, they're more likely to want to do something to help you back. And whether that's a YouTube mini series or a PDF book, a white paper, a benchmark survey, a series of interviews you do on a topic, whatever it is, if you're adding genuine value to someone, they're more likely to want to meet with you and add value back. And that's what Brian found. And he had a record capital raise because of that. Tony Robbins is an example of a scarce authority, at least in some people's eyes, at least in the late 90s, early 2000s. And if not now, he's seen as an authority on self-improvement and leadership. There's not many self-improvement gurus that have self-improved themselves so much that they became a billionaire. That's pretty unique. And so his level of reach and notoriety just grew to a point of, whether you like him or not, like his kind of a preeminent authority in that niche. So he's an example of a scarce authority. And Jay Abraham was introduced to me through Evan Pagan, one of my early mentors. And his whole theory on authority is really to have preeminence. Cialdini is referred to as the foundational expert on influence. That's the ultimate position of authority. And that's what Jay Abraham, who is thought of as one of the smartest business development and marketing minds alive today, that's what he really talks about more than anything else, is trying to get to a place of preeminence in your niche. And you might say like, oh man, I'm so far off from that. I'm just trying to do this. I'm just trying to acquire 5 plumbing companies, or I was trying to acquire first 3 hotels, whatever it is. But you could be number one in your niche and you carve out a small sandbox and say, well, we are acquiring dry cleaners only in Houston, and we want to have more dry cleaners than anyone else in Houston. And at least in that sub niche, maybe you're more well connected than anyone else. So you can always niche things down. When I talked earlier about influencing yourself and having an ethical reputation and how to be consistent with where an investor has acted before, one way to get to those places is to ask more questions. A lot of times you get access to an investor and they say, oh, great, when do you have time to go through the pitch deck? You get into the pitch deck or the meeting, you go through all the slides, you say, oh, do you have any questions? The other way to do it, which is much more effective, is to ask questions for 60% of the time and then tell the part of the pitch that they actually care about. Then emphasize the thing which is very consistent with their past actions. And you'll learn way faster than if you just pitch the whole time and they say, oh no, I don't think I have any questions. Let me just follow up next week if I do. And then nothing really happens, right? So spend your time with investors asking a lot of questions. Stephen Covey says that to be influential, you first have to be influenceable. First, you need to take in a bunch of information, and then you can be influential after you've allowed yourself to be influenced. Is there any questions about that? If not, I'll keep going. Just have a couple slides left and I'll wrap up here. Covey mentioned, related to listening, that most people are just horrible listeners. You're lucky in school if they teach you anything about public speaking. Usually they teach you absolutely nothing, even in an MBA, about listening, right? And it's more important to listen than it is to speak. And Stephen Covey talks about how most people speak at 150 words per minute, but they can listen at 500 words per minute. That's why a lot of us listen to Audible at 2 times or 3.5 times speed and get through books fast, because we can listen way faster than most people talk. So most people get bored while you're talking because they can hear at a much faster rate, right? And so that's something just to keep in mind and be thoughtful of, so that when an investor is talking, take notes and really try to empathize with their position and not ignore what they're saying and just latch on to the first idea that comes into your head. And that's something that takes some practice. But I find that most people are just pretty bad at listening, and most people are not used to others actually listening and following up on exactly what they said to follow up with. And some of my best relationships are with $100 million net worth families, and I only touch base with them twice a year when I have something that's exactly what they told me they wanted. And I'm not following up all the time, just get on another call. And they're like, why do we need another call? Like, I don't know. There's not something really relevant, right? They're super busy, just like all of us are. Gary Vaynerchuk has grew 3 companies to 60 million in revenue. And he says he is a counterpuncher in a world of jabbers. He's a big boxing fan. And he said other people come out jabbing and pitching. And he just listens, and then waits for that opening to add value and really close someone on exactly what they want. So some of the things we covered today in the presentation was persuasion, planting things, reminding people of things, and putting it in the prefrontal cortex so that what you're doing next has kind of a light shown on it and it's extra influential. Becoming a scarce authority, learning how to influence yourself, and coming up with many strategies to make yourself more disciplined, more focused. I have a 1-pager that I read every day with my monthly, quarterly, annual goals and about 50 statements that I know I have to abide by in my life so that things go better. And I review that every day so that I can influence myself to be more influential to others and just be a higher level version of myself, hopefully. Meet and close people in person. It's at least 16 times as effective. I think it's probably more like 30 or 50 times as effective. Long-term commitment equals conviction. Show you're committed to your craft and what you're doing, and only act in ways that nobody would do unless they were long-term committed, and that's going to earn trust faster. Open with a mystery or open a loop in an investor's mind, and they're going to want to close that loop and hear the rest of your pitch and figure out what's that one thing you learned that saved you $1 million, but save that for the end of your presentation. That's a way to hook a very busy, wealthy founder. And then the last point is just try to be the number one resource for a specific type of investor. Like maybe you're the most informed person on tax strategies they know, or on solar, or on whatever your niche is, right? Like for Badri, it's a customized fund approach, right? That's like a unique position in the marketplace. And so he's cut out a clear spot. Sanjay and him have cut out this clear position in the market with A-vestor that's not like 1,000 other options out there related to funds. So that's it for today. Our website for our investor club is just familyoffices.com. You can see our event schedule there. Our 650 person event is coming up December 10th to 12th in Miami. It's in Key Biscayne, just about 15 minutes from downtown Miami. And appreciate everyone's attention. Happy to answer any questions that anybody might have here.
Thank you.
Oh, go ahead.
Oh, go ahead, Richard.
I was just going to say that one thing that's interesting is just to look at meetings you have coming up, or looking at your pitch deck and your one-liner and your one-pager, and just thinking, what thought leadership could I put out to enact a sense of reciprocation, and investors would get so much value from that infographic or that checklist that they're going to want to talk to me and get value from me. Like, what can I do? So my first interaction with an investor is giving them value instead of pitching, Bobby, were you going to say something?
Sorry, let me unmute. Hey, Richard, great presentation. Nice to meet you.
Thanks.
Want to run a question by you. I'm a big believer in meeting in person, and I think it's a great way to connect with like-minded people and all that. My situation is a little different now. I'm not in the States anymore, where most of my investors are. So sure. 9 to 10 months out of the year, I'm not in the country. So what is the next best alternative for me to connect with people?
Where are you the other 9 or 10 months? Like what country are you in?
Bouncing between South America and Asia.
Okay. So obviously Asia has tons of new wealth being created there. So that's partially why I'm living in Hawaii, and we're starting to host 4 events a year in Singapore, and then Sydney, Australia next after that. We think a lot of the future wealth creation will come from there. So that's one thing just to keep in mind, is like maybe there's one city in Asia that you focus on tapping into, like networks wise. For when you do go to the US, then, I would probably try to concentrate your energy just on 2 things, like where you're buying assets. Like let's say you're buying, multifamily properties in Nebraska or something, or maybe it's Texas, then I would focus your capital raising efforts on just 1 or 2 cities within the United States, right where your assets are that you're acquiring. Because then even if you're not there, the investor could go visit the property with one of your team members. Or when you're in town and doing due diligence on properties in Texas or Nebraska, you could meet with them easily. So there could be a lot of synergies in doing that. So that'd be the first thing, is the geographical focus. But then depending on the niche you're in, like let's say you're buying dry cleaners or plumbing companies, et cetera, I would also then go niche on that demographic and find people who have had exits in that space, and people who have sold their plumbing companies are amazing prospects to invest in your plumbing fund, because now you don't have to explain to them plumbing, like they get it. And might be hard to build that database. Of course, there's some challenges to that, but with some like offshore data researchers, you could probably put some together. So the first idea is geographical focus, where it's near the assets you're buying. And the second is like, if it's a litigation law hedge fund, maybe pitch law firm partners. They might source you a deal. Same with a plumber. Their friend might be selling their plumbing company, and you don't have to teach them the ABCs of law and litigation funding.
Makes sense. Thank you, Richard.
Sure. Yeah. Corey?
Yeah, thanks. Great presentation. And I arrived just a little bit late, but if so, sorry if you already answered this. But what does the initial reach out look like to engage? I think that's something I'm testing right now and in figuring out. And
Yeah.
obviously, and how different is it from going to a family office or a very high net worth individual to like
Yeah.
a small balance investor? Like that initial, with given that you don't have a brand, it's not really built out. They haven't been on a campaign or a newsletter.
Yeah.
I'm building out right now, but that's just for the short term.
Yeah, sure. So after 17 years, I'm still evolving what we do. I think like it's a constant evolution is one part of the answer. The other is that on the hardest to reach people in the world, cold emails do work. And we have proof of that because we've interviewed 42 billionaires and 30 of those were done through cold email approaches. With Mark Cuban, it took 14 emails to get him to reply to us. And with a billionaire like Mark, we'll space it out by 2 or 3 months. So we're not bothering him 3 times a day. For a high net worth individual, maybe I'd approach every 10 to 20 days, but through different mediums, different subject lines. The worst thing is to send a long email. Someone has to read an essay to figure out what you're doing. So concise is always best. Adding value to them is the ultimate way. So like when I moved to Arizona, before I came to Hawaii, the first week I was there, I met a $100 million net worth family that I messaged cold on LinkedIn because I was having my car serviced and they had a subscription plan to their service company. I said, oh, that's a really smart model. I wonder like if I could invest with them or something. And I looked at their website and they had like 18 locations. So like, whoa, these guys are making a lot of money. And I reached out and I didn't pitch them on me. Instead, I said, I have an investment structure that assuming you're raising capital for each of these locations as you open them, you'd be able to raise the money, pay off investors and give them zero equity. You keep all the equity and give them a good return and they go on their way using my gross revenue royalty structures. And would you like to have a cup of coffee and meet since I'm local? And it was literally like a sentence and a half. And I emailed the 2 founders through LinkedIn. They didn't know I had messaged both of them. They both replied the same day that they wanted to meet. And I found out they'd already sold their company for 180 million to Goldman Sachs. So like that, if you can get billionaires to reply and centimillionaires to reply, then it's going to be easier to get angel investor size or high net worth to reply. But adding value is the biggest thing. So like we'll go to a billionaire who's written a book and say, hey, can I buy 500 copies of your book and give it away at my conference? And really, okay, it's nice to give it away. I'm really just trying to get them to answer my 3 questions for billionaires.com so we can get to 100 billionaires interviewed. I really don't care about buying their book, but it's giving value to them first. And I just say like, hey, and it'd be really cool if you could answer these 3 questions as part of that. And like, that's really what I'm going for. But I offer to buy 500 copies of their book first. And that's worked with a few billionaires. But I don't have like the magical thing. Like with Mark Cuban, it's somewhat inappropriate, but I'll say it anyways. I don't think anyone would be too offended. But like with Mark Cuban on Shark Tank, he always says no balls, no babies, right? And so I did all these serious approaches. He completely ignored it. And then I said something about, I said like no balls equals no babies in the subject line. And then he actually replied to that email. So that's one time where sense of humor got him to actually reply. So I'm trying to use a sense of humor. I think that's probably the most inappropriate professional message I've ever sent to anybody, but like it's his own words, right? So he can't get offended by it. But concise, add value, say something unique, those are the top things I would use for reaching out. And 99% of people reaching out are pitching. They're not offering value at all. So like it has to be in their best interest to reply as if you're the most valuable email in their whole inbox for the whole day. Nobody else sent over something more valuable than what you just sent them,
Mm-hmm. Yeah. So like maybe if I could find this for you, would that be of interest to you? So like bringing value, like, can I bring you a deal? Can I go find this for you? Given that
that's possible value, but I think it's 10 times more valuable to say, I have this for you. Can I make the connection? I have a client for you.
Pitch, like actually having a deal. Cause I found like a lot of the conversations I strike up, like the best ones I have is that because I have something to actually share.
Yeah. I mean, you have to be careful because like if you say I have this deal for you, it can still look like just a pitch, right? Yeah. If you said it could be not even related to your deal, be like, oh, I have another $100 million family in the auto parts industry. Would you like that connection? Or I have a client for your manufacturing business over here. Could I help you with that? Or I have this for this one entity I know you own. Because if you say I have this amazing hedge fund, do you want me to do the favor of allowing you to invest in it? They're going to feel like it's just like a sales pitch, right? It's like a thinly veiled sales pitch. And these are the most cynical, busiest, skeptical people on planet Earth, and they get 1,000 pitches a day. And we have sometimes people that like will get like a list of leads or like investors from us. And it's really interesting dynamic because they'll say, man, I emailed like 100 investors and no one emailed me back. This list is garbage. And like in their mind, they don't even conceive that maybe it's the message you're sending them, and maybe no one owes you a reply. Like maybe your email sucks, right? Maybe it's just average, and no one owes you a reply to your random email, right? And so that's like the harsh reality is like everyone's busy, everyone gets pitched a ton, so it has to be really unique. And one family office on stage 2 weeks ago who manages $1 billion, he's allocated to 200 investment managers. He says, just tell me why it's unique, why it's compelling, what's your competitive value add edge, and link to some of your materials. That's it, like 3 bullet points. I don't need an essay, and so I know it's like a long answer, but I think like what you asked is super important, because if you don't get traction up front, then nothing else matters really, right?
Yeah, and it's a very nuanced topic. What I'm hearing is that you need to really research like that family office, what appeals to them, try to do some like research. Maybe there's something personal attribute that can be bled in there. They're an author, they're trying to get their book out there, live their legacy, right. Appeal to that, and then kind of bring it in without it feeling like a pitch. So yeah,
ideally, right? I mean, if what you're doing is so unique and you can say it so well in a single sentence that it pierces through their inbox and hits them between the eyes, then you're going to make a lot of money and raise a ton of money, and like good for you. But it's hard to find something that magical that nobody else is offering them. So just, we're always trying to improve what we do to have a better hit rate. And that's what we've learned, to date. And we do tons over email. So if you ever have some breakthrough idea on that, I'm definitely happy just to trade notes with you offline. But since we started our business, my Gmail account, I've sent 199,000 emails of sent emails from my Gmail. So like we email like a ton, and we're still learning. So always happy to trade notes.
Beautiful. Thank you. Yeah, I'll take a look at it.
Cool. Any other last one question? And then
yeah, I don't have a question, Richard, but I just wanted to restate what the conversation just was. So what I'm hearing is you need to offer something that benefits them, that doesn't necessarily benefit you. So not something that's reciprocally beneficial, something that as an example, using the family office, instead of coming them with a deal, they don't need deals. They have 100 deals pitched to them every single day. So it doesn't matter how great your deal is. But if you have a high net worth individual who is exploring family office, and this is not a single family office, but a multi-family office, you may be able to bring them that high net worth individual and say, hey, I have someone else that would be interested in talking to you about joining your family office. That's something
right.
Giving where you're not getting a direct benefit, but definitely could come back, and open the doors to allow you to build that relationship.
Right. I mean, like one quick idea that anybody could apply is like, let's say you're talking to an investor and they don't feel like they're 100% equipped on how to evaluate other real estate sponsors or funds. You could say, here are the 15 questions you should ask every real estate sponsor before you allocate money. And here's a little checklist. Here's a little one-page infographic on navigating the private equity world. Always ask or look for these 20 things, etc. Or here's a little AI due diligence tool that we use while evaluating opportunities. If you want to use this free tool as well, here's a link to it that you can use for free. Like those are things that are like, oh, the investor's like, oh, that's actually useful. Because like, even if you're in the market to buy a Rolex or a Mercedes and you go to catch a flight on an airplane today and you're walking through the airport and you're in line to order like a burger and someone grabs your arm, like, hey, you want to buy this Rolex? You're like, who are you? No, I don't want to buy a Rolex. Even though you're literally looking for a Rolex 10 minutes ago online, you don't trust this random guy. You're just trying to buy a burger, right? And so there's no context. And so it's all about the context of trust, right? You walk into a Rolex shop and there's an expert there and you trust them. It's like, okay, you might actually buy the Rolex you're in the market for. So it's all about the context and the trust. It's not about who's offering the highest return in my experience. All right, awesome. Yeah, well, appreciate having me on here, Badri. I've got to run for a meeting down the street, but if anyone has questions or wants to follow up, it's just richard@investorclub.com, or you can reach out to me through Badri, and I'll make sure and share my PowerPoint as well.
Thank you, Richard. We'll post the PowerPoint. Very enlightening as always. Thank you. Appreciate it.
Thank you, everyone. Yeah, take care.
All righty. And then without further ado, I'll go ahead and pass it off to Badri, who's going to present on how to deal with various investor objections.
Thanks, Demaris. It's really funny. I mean, we developed these slides completely independently from Richard, but it literally aligns very well with what he's saying. But so I would think of this more of a talk, but more of a discussion. And let me get started. But before we do that, there were some questions about when is the mastermind moving? Did we figure that out, Demaris? I know we settled on 9 o'clock on Tuesdays. But is it from the first week of November? Did we figure that out? I mean,
starting November 12th. So
November 12th. Okay, got it.
Tuesday,
I've been saying first or second week. Okay, got it.
We'll send out a blast email announcement next week, and then you should be receiving the new invite in your inboxes on your calendar shortly as well. If you don't receive it, feel free to send me an email, and I'll make sure that you get the invite.
Okay, very good, very good. So don't forget, guys, and gals, we are moving the mastermind. So can everyone see my screen? Mm-hmm. All right. I don't like going into the presentation mode. Sometimes I'm scanning between slides, but this should be big enough. Again, this fits in really well with Richard's presentation, and this is really more of a discussion than a presentation. So I would love it if you jump in with your experiences with your investors and how you overcome investor resistance, right? So this is part of our educational series. By the way, we are going to be recording all of this, and we are going to develop some self-paced content in addition to Lance's course. We have some excellent range of topics. This is one of the topics in that series of educational slides. So what we would like to do is kind of understand the reasons why investors don't invest. I mean, some of this is old news to you, but I would love it, like I said, if it's more of a discussion. How do you overcome these resistance factors? How do you build credibility and kind of just develop a plan of action, right? So many of you probably know me as a co-founder of Evester. I think I know almost everyone in this call, but just some background which you may or may not know about me. I invest in every asset class out there, multifamily and all the real estate stuff. I invest in crypto. I've invested in about 35 startups. Probably I've listened to 500 startup presentations. I've invested in venture capital funds, bonds, stocks, some commodities. I actually ran a hedge fund which involved index trading options. And it was personalized option strategies for each investor. I'm not selling that because I'm not even offering that anymore. But just to give you some background, I have been an investor. I've been on both sides of the fence. I've listened to thousands of pitches on the investor side, and even in Ariel LP, which is the fund which we built to test out the platform, the Evester platform. I was managing all of the investor relations, and we evaluated hundreds of deals and invested in, 30 or 40 of them. Yeah. So just my background, just in case some of you may know me more as the co-founder and the sales, coordination, VP of sales for Evester, but you may not know some of my other background. Yeah. So what are the top 10 reasons why investors don't want to invest? I mean, feel free to add something else to this. I don't trust you with my money is the very first thing, right? I don't have the money. Now, we need to decouple I don't have the money from I don't have the money now, completely two different things. I don't want to lose my money. That's extremely common use case. I don't understand the asset class. I mean, Richard talked about that. I mean, can you educate them if they don't know anything about the asset class? I don't understand how you make money. You want to be very clear about how you're making money. Don't try to hide it under the rug. Be upfront. I mean, some people come to that at the very end. Oh, by the way, here I'm taking about 10% on the top. I forgot to tell you that. I mean, that's a real quick way of stopping any chance the investor will invest with you. The track record. My spouse and I are not aligned. I mean, often you pitch everything to one spouse and the other spouse is completely misaligned. I mean, you want to get that aligned right in the beginning. I don't want my money locked up. I've been burned before. This may not sound very nice. You're not very smart. I don't think you're worth investing with, right? I mean, okay, build credibility, the authority, what Richard was talking about. So let's start with I don't trust you with my money. And again, this goes back to literally, it aligns very well with what was talked about in the previous presentation. I can't tell you how many times I've gone to a meeting and the very first thing is, hello. Hey, by the way, I've got a deal. Do you want to invest in it? I mean, that goes back to the Rolex example. You're sitting in line for a coffee. Does someone want to sell you a Rolex? Do you really want to buy it, right? Context is everything. Emails are a very weak thing to start with. Have coffee with them or have maybe dinner with them better. But getting a referral, definitely meeting in person is far more better than just selling somebody over email. So the thing is people try to reach out to hundreds and thousands of investors. It is far more important you reach out to a subset of people who are your niche avatar. We have talked about avatars before. Derek Pedersen and Adapt Media and other marketing people have come and talked about avatars, right? Find your niche. Maybe you're a pilot. Maybe you're a doctor. The very fact you can speak that language makes them much more likely to invest. And try to find 30 or 40 people rather than 300 or 400 people. And then build case studies with them and then showcase that in your website, right? I mean, we have talked about this. Very rarely do people have such an impeccable track record that the investor is willing to chance it. So be open about what you have done, what your track record is. The second objection is, I don't have the money. And I think it's really important you separate out, I don't have the money from, I don't have the money now, right? Now, if you want to play the long-term game, somebody may be out of a job, but he's going to get a job. And somebody may grow into become an accredited investor. It depends on how patient you are. Discuss all the other ways you could invest with you, right? As SDIRA, solo 401k, maybe you take loans from your company 401k. And it's very, very important you keep in touch with them because situations change over time. And again, please do jump in if you have any comments or questions, or even share your experiences with what worked or what's not worked. Yeah. The third thing, I don't want to lose my money. This probably is maybe the very first objection, really. I mean, people are, you have heard this before. There have been innumerable number of studies which said that people are much more risk averse, loss averse than gain. They prefer gains. So it's almost 2 to 1 or 3 to 1. I mean, they would rather lose. They would, even if you give them $2 to gain and it's $1 of loss, many people may not go with the gain, right? I mean, so people are very, very loss averse, and I think it is fairly important that you understand their risk tolerance. That's the very, very first step. I mean, there are various quizzes you can give them. I mean, that sounds a little too formal. And even a very simple question, hey, how would you react if you lost all your money in this particular investment, right? And I think I'm a great fan of, for my own personal portfolios, I'm a great fan of asset diversification and the barbell approach, right? You have some assets which are really, really risky, but maybe it's 10 times the return. That's how I think of my Bitcoin and my option strategies. But then there are other assets where I have whole life and life insurance and money market accounts and CDs. So try to see where they are in that spectrum. And some people don't know where they are. I mean, they may think they're in one end of the spectrum, but when you ask them some questions, you'll quickly find out that they're really in the opposite end of the spectrum, right? See what their risk buckets are before you start pitching a particular deal for them. Understand them, get to know them, and then in terms of explaining the asset class, this goes without saying, you want to educate the investor before you start pitching them a particular deal. I think, again, Richard gave a great example. Maybe instead of going and talking to them about the deal first, say, hey, here are some things you should be aware of in a multifamily. I mean, even your email campaigns, right? You probably want to do a bunch of educational emails before you start pitching them a deal. You want to prime the pump, build a relationship with them, educate them, give them some value before you start asking for them to invest in your deal. So, I mean, obviously a multifamily value add business model is very, very different from a new construction business model. I mean, you want to educate them on the cash flow trade-offs and when you're going to get cash flow in one asset class versus another, the risks associated with a particular asset class, what may go wrong or what may go right. Any comments so far? Anybody wants to share any stories about any of these 4 objections so far? Feel free to just unmute your mic and speak up, yeah? If you want to share
Badri. I actually have come across I don't understand the asset classes, not so much the asset classes, the strategy. A lot of people are very familiar with investing on the equity side of the capital stack, but when it comes to investing on the bank or as the bank by investing into debt, it can be, I find myself going back to the absolute basic foundation of this is the structure of acquiring real estate. And, you typically bring money to buy the asset and then you're getting a loan from a bank. When you're investing in debt, you are investing on the side as if you were a bank. And it can be actually very challenging to break through that I won't call it a mental barrier, but that understanding barrier of their understanding of real estate and how to invest in real estate when they've never considered or heard about investing in debt, yet everybody's familiar with it because if you had to go get a loan to buy a house, you're familiar with debt, you're familiar with getting a loan from a bank. And so it's helping people see or helping investors understand for those who have allocated, like you, hey, I'll allocate 10% of my investment to a high risk strategy. I invest, 10% towards very, very low risk government-backed type investments, and then finding that, okay, what have you allocated towards like a cash flowing secured real estate, but not necessarily high returns as in equity side. So that has been an ongoing challenge, and it seems like have that conversation of having to break that down with a lot of investors.
No, that's a fair point. I mean, that's absolutely. So whenever we say asset class, we probably should substitute asset class and asset type too. When I say type, is it preferred equity? Is it, if they have to understand, just like debt, they have to understand the trade-offs between preferred equity and common equity, right? I mean, so it's not just asset class, it's the type of asset. And I think the word you used was strategy. The structure of the asset too. So debt could be, a CDO, a collateralized, a CLO is a far more complex instrument than, okay, I'm taking a 30-year mortgage on a house, right? So the asset strategy and the asset structure is also equally important. So really, you should be including all of that here, yeah? So good point. Thank you for sharing. And we already talked about this. Be very, very transparent about how you make money. I mean, take the time to explain the different pref vol structures. I mean, that's why our entire deal disclosures, hopefully everyone in this call has at least filled out one or you're in the process of doing a deal disclosure with Avestor. We try to be very, very transparent on how you make money, identify all the conflicts of interest, and explain to them not only legally, but also explain to them in verbal conversations, hey, this is how I make money, this is the reason I make money, this is why I deserve the money, It doesn't have to be all in one sentence, but over a course of maybe multiple conversations, right? And if you don't have a track record, obviously, some of you are capital allocators. You can depend on the track record of the sponsor you're raising capital for. But the most important thing is, again, going back to the conversation from the previous the previous conversation. Being ethical about your track record is really the most important thing you can do. I'm not going to mention a name. There are a couple of people who are one person in particular who's really well known in the industry. We have invested in a couple of his deals, didn't do that well. But then I listened to his presentations. It is a he. Okay, you got a hint. And he never talks about the deals which went wrong. It's all cherry picked. And, if there are 50 deals, he picks the 25 deals which go right and gives the average returns of that. That quickly catches up on with you. He's very well known in the industry, but I just can't believe he gets away with it. Be very transparent about your track record, guys. It's going to catch up with you sooner or later. So, and if you don't have a track record, explain why the investor should invest with you. Why, because of the track record of the sponsor or the deal, but be transparent about it. Spouses, it's very important to know that you're not just selling to the investor, you're selling to both the spouses. I've always been in situations, especially in that hedge fund which I ran, the one of the spouses, maybe the husband, maybe the wife, is completely aligned with the strategy, understands it completely well. Then he goes home, talks to the wife or talks to the other spouse, and the whole thing falls apart. So make sure that try to understand if both the spouses are involved in the decision-making process, and try to get both spouses in at least a couple of the preliminary conversations which explain the structure of the investment, the asset class, and everything else. I don't want my money locked up. That's a fairly common objection, especially for private investments. So there are some options. You could offer the option to buy it back at cost. Now again, there are some legal issues associated with it. Nothing profound here. Make sure that you understand the time frame of their investments. This again goes back to understanding the investor itself, their risk tolerance, their time needs. If you know that they have a kid going to college in 3 to 5 years, well, the type of investments you recommend might be quite different from if somebody doesn't need the money for 10 or 15 years, right? And make sure you explain to them the distinction between cash flow and getting the principal back. I know that sounds obvious. And the nice thing about Avestor, of course, is that there is the virtual cash balance, and some of you have used Meow. I understand there is some interest arbitrage there, but at least that's an option. And Edwin and Bobby and a whole bunch of others have short-term debt funds too, which you can put if people want liquidity and shorter-term investments. Yeah. So this again goes back to understanding the investors, right? I've been burned before. You really have to, this is part of your investor discovery. You want to ask the investors if they've lost money in any deal, not just that similar type of deal. I know the slide says similar type of deal, but your life experiences shape how you think, how you invest. So it's extremely critical you understand what went right for them, what went wrong for them, not to give artificial knowledge, but at least tailor your approach so that you can understand, you can explain to them, hey, I know this is what went wrong before, but here are the 5 reasons that's not likely to happen. Nobody can guarantee anything. Explain the risks, discuss the risks so they're completely on board. And then you're not the very smart objection. Well, become smart is the tongue-in-cheek thing which I'll say. No, seriously though, you need to understand your investment inside and out. Sometimes I've come across capital allocators, all they're doing is they put their name on the slide deck. Now, nothing wrong with that, but to put your name on a slide deck where you're selling somebody else's investment, you really need to understand that investment completely. They wouldn't even have gone through the underwriting spreadsheet. They wouldn't even know what the debt provisions are. You need to understand, this seems obvious, but it's your responsibility as a fund manager to understand this investment completely before you present it to the investors. And do some practice pitches before you go to sophisticated investors, and have a set of questions which you want to ask yourself and make sure you can answer that really well before you present that investment to an investor. Seems obvious, but I can't tell you how many people have come and pitched a deal for me without being able to answer some basic questions. Yeah, it's okay not to know everything, but some basic questions about the structure of the investment, the debt, you really better know. Yeah, so there are different layers of credibility. Again, kind of touches on some of the previous conversations. You start with personal credibility, then you start with the team credibility, and then finally, as your fund grows, you're building your brand credibility. You don't want to ask your part-time virtual VA person to take down the first conversation with a $100,000 investor. So until you have the brand and team credibility, it's your personal credibility on the line, right? So that's where you kind of start. So no big profound statements here. Take time to know each of your investors. Focus on your avatars. Just don't go spraying all over the place and hoping somebody will land. Again, Richard gave that example, right? I sent 10,000 emails. Even if I get 3% return, this is like the people pitching to a venture capitalist. I'm going after a $10 billion market. Even if I get 1%, that's $100 million or whatever. That math doesn't work. Try to understand the real reason they're not investing with you. And if you have some shortcomings, just acknowledge it. And then develop a plan and, hey, here is my shortcoming. I'm not an expert on underwriting, but I'm hiring this expert underwriter. And I am not very familiar with that local space, but I have a local person who's going to go inspect the property. Be very forthcoming and develop a plan to address your shortcomings. Work on establishing real credibility over investors over multiple calls, and then measure the results. That's very important. I mean, see what is working, what is not working. I mean, Einstein's quote, right? Insanity is repeating the same thing and hoping it'll change. So you want to vary it up and see what works. So that is what I had. I think we have time for a quick, we can definitely time for discussions, but we also have time for maybe a breakout room. We haven't done that for a little bit. Comments, questions? All of you deal with investors. Anything else you'd like to share? Some things which worked, things which didn't work. At the end of the day, this is all about sharing from each other's experiences.
I'd be interested in knowing if anyone has had any recent investor calls where they had an objection they had a hard time overcoming, or one that they're still wanting to follow up with that investor with an answer. Maybe we can help.
I guess the elephant in the room is just, the election. So, I mean,
that's true.
That's a huge one. I've gotten it a few times. I have one other, but we can maybe just drill down on that. And it went, because it's not like an active offering. It's about to be. It's more like priming. The conversation wasn't, I wouldn't say it went bad, but I would say that they gave me like let's talk in the new year, and pushed me off, and I have to re-engage them if I want to get that equity before the end of the year for one of our projects. So I guess what I would say on that is how are you guys encountering that right now? I mean, it seems like it's asset specific, but my mentor, I told him about what happened. And he's like, well, he explained, would you buy this deal in this market, in this market, in this time, in this time? And he gave me all these examples, and he's like, he made me say yes. And I was like, okay, great. Well, it's still a good deal then, so that's the way he asked me to explain it. I plan on reapproaching that, is basically showing like in a down market, a medium market, and a good market, would you buy these numbers? And so I'm going to go with that. I haven't tested it yet though. But I did get that objection.
I would be interested in people's reaction to the election thing. We are getting that even in the investor sales calls, saying, I want to wait until the election is over before we create a fund. I don't know if that makes sense, but if it makes sense in their mind, it makes sense.
Right. Good point, Badri. It doesn't need to make sense. It only needs to make sense to them. And I would approach the question a little bit differently, Corey, which is you can overcome objections, and have 1, 2, 3, or 4 really great responses to that objection, but you're still limiting yourself to the 1, 2, 3, or 4 objections, which you hope will cover 80% of the folks out there. But you have no way of knowing that. My approach is always just to ask more questions, which is, okay, that's a very valid concern. I know there's a lot of folks out there right now that are asking the same thing. Why are you concerned about that? Or what is it about the election that you think would have an impact on this investment? I would just ask more questions. Don't ever answer, just ask more questions. And if you ask enough questions, I think you'll eventually get to that one thing that's really bothering them.
Yeah, that's good. And not to get into proving. Yeah. So I did ask a light question, but I think I need to design like 3 or 4 to keep the layers going. Because I was like, well, what do you think is going to happen? Are people going to stop moving to Florida, if Kamala Harris gets elected? It's like, and then I kind of pulled a little bit in net migration patterns and stuff like that. So I guess it's like, it's pulling those layers deep. I'm going to design that a little better.
Yeah. And I would be thinking about asset specific types of objections and and area specific, location specific objections, in addition to political specific objections. So, regardless of whether we have a Republican office or a Democrat in office, there's money being made in all of those scenarios. And so I would want to ask enough questions to specifically get to a point where they may say something along the lines of, well, I'm afraid that they're going to sunset a lot of the real estate specific depreciation rules, and that if the Democrats win, and I feel very strongly if the Republicans win, that they're going to renew those things. And so, by asking that question, okay, are they in a really high tax bracket? I wouldn't assume that. I would ask, are you in a really high tax bracket? Are you trying to get to do you need a specific dollar amount to eliminate your federal tax burden? And you can find a way to help them get there, whether it's with this particular asset or another tax strategy, or introducing them to one of your CPAs that can help them figure out how to get to zero, and just continue to be of service in that way. And if you do that, I think you're more likely to get them to invest. Now, we need to face the reality that Richard was talking about. No matter how good you are at overcoming objections, no matter how good you are at redirecting and asking questions, you're still, if you're a great closer, you're still going to close 2 or 3% of the people you talk to. And so it's more about getting really practiced at asking those questions, and realize that your closing percentage of 2 or 3% is the immediate closing percentage. That's not your long-term closing percentage. So that person that you help today, you may not close today, but you may close next year or 5 years from now. And so how do you gauge that closing percentage?
No, yeah, I love that. And just always being in service of that too, and creating that trust, because people invest with who they trust. So I love that.
Hey, Jim, that was good. And Corey, the only thing I would add to that is I'm actually in the middle of hopefully putting together a large multifamily deal. And one of the aspects of getting that deal is that there's 5 investors on the other side, and one of them's nervous about the election. And so the opportunity to strike that deal now is because of the election. And so I think you address any elephant in the room, right? There's a bunch of information floating around. It's going to continue to float around. And I think if you can ask the questions to find out what they truly are concerned about, but also, let them know that there's a good chance that what you're dealing with is because of the uniqueness of the time. And so if you can point out that sometimes that's helped investors I've dealt with get comfortable with the situation. And I think the last thing, at times I try to play out worst case scenario. Say, okay, worst case scenario, this is what happens. Great. Are we okay? Yeah, we're okay. Right? Because you're de-risking the asset. So you're trying to say, why is it that you're interested in it at this time? What is it about what's being thrown around? For me, in the multifamily space, right now we got an affordability problem. We got both candidates talking about having to do something about it. And one thing that's been thrown out is capping rents at 5%. Well, I'm not running anything at 5%. And if you do that, what are you going to do? You're going to stifle any further development, any further growth, because the developer's not going to be able to bring it out of the ground. So I think there's a way once you figure out what it is that they're actually concerned with, point out the reason why you're excited about the deal in this time, because you're no different than anyone else. I mean, I can't get away from all the text messages that are coming from politicians. So if you'll focus on those, I think you'll be good. Mm-hmm. Badri, I don't know what you do for setting up a fund, because I'm trying to talk to my attorneys about getting ready to do a lot of work in November and December, and I'm getting the same response. I don't really want to do it right now. So I don't have an answer for you.
Well, I think the right question is, what are you afraid of? And, well, I'm afraid the Democrats will win. I'm afraid the Republicans will win. Well, if that were to happen, what do you think would happen that would cause you not to want to invest? What do you think would happen that would have a negative impact on your investment? And, dig down to that real core fear or concern and give yourself the ammunition to overcome that.
That's great. Yeah. And I can already think about a couple specific things for our thesis in our certain area that support that. And because it's kind of like related to infrastructure. And how it would be stable through that time. Thank you. Appreciate that.
I think everyone
coming
got
up with some data, supporting data for the scenario, right? And end of the day, we do have a track record for Democrats as well as Republicans, showing that or in either case you show, I mean, the returns were there, but it varied, but there's no negative impact, right, post-election. Maybe that should ease their mind off, I think. That's what I'm thinking.
I'm seeing a graph in my mind right now, Sridhar, when you said that. You know, the graph of real estate growth, and then the overlay on top of that is the name of the president and the administration each time.
Yeah.
Regardless of who was there.
Yeah.
It kept growing.
Yeah.
Great point.
And often this is just a smoke screen, right? You guys already know that. I mean, that's not really the reason that they're not investing. The election has nothing to do with it. So, I mean, I completely agree with Jim. At least if you ask those questions, then you'll find out that really it's nothing to do with the election. It's just uncertainty, and they don't know. Maybe they're not ready. Maybe you have not addressed all their other objections. The election is a very convenient thing. Oh, it's the election. I'll come after it. We'll talk after the election. So,
I think that's great too, Badri, because if it's just that they're really just afraid, it really has nothing to do with the election. It has nothing to do with the economic cycle, interest rates. I'm just afraid. You know, there's a lot of people right now, you know, that are going bankrupt in this industry. And so I'm afraid of the industry. So that's great. That means I have a long-term opportunity to educate you about our deals, about the industry and other things. And it's just not your time right now. So I'm not going to spend another 2 or 3 hours trying to convince you. Instead, I'm going to put you into this educational drip and just continue and wait for you to get to a place of comfort.
Yeah, and I guess I would add, I've had at least one investor, and again, these are long-term investors, and they're older. And one of them, 2 weeks ago when I called him, he said if the election doesn't go the way he'd like it to go, he's moving all his money offshore. And I said, great, how do you do that? I said, I have no knowledge in that. How are you gonna accomplish that? Where are you gonna go offshore? And clearly what's going on is that it's, you know, you've got smart people purposely getting people riled up, and you've got them anxious. And quickly, as we had that conversation, and again, we've been together for a long time. So I said, you know, at the end of the day, is what we're dealing with federal, or is it really going to be local? You know, what issues are going to happen in the local markets that we're involved in? And I said, if you want to go offshore, just pick a nice place. I'll come visit you. That sounds great. You know, get again, kind of support.
Come visit for money. They're not going offshore. Just the money.
So if this is what you want to do, go do it. But, you know, I mean, I don't know anything about that, and I'm not sure you want your money sitting in that bank either. So the point is that I think it's a real issue. I think you'll see people get anxious here over the next couple of weeks. I'm not sure the election's going to be decided in a day, and so I think it's going to really get interesting. But at the end of the day, I think if you hit it head on and just say, yeah, I understand your situation, but let's talk through some of this, and then maybe when they calm down, they come back. Maybe they don't. Right. But Badri, to your point, that my situation that I had, the only reason I commented is that this individual truly was worked up.
About the election.
Watched the wrong news channel, and he got the wrong news. And, you know, I don't know if you've seen, but I have some local official here that's saying that the government somehow controls the weather, and they purposely sent the hurricane to North Carolina because it was Republican. I mean, and people are actually saying that. You know, I mean, you're sitting there going, really? That's what you're going to say in public? So we're in a wonky time. You know, there's just some strange things that are being said, and it gets some people worked up.
We need to get their eyeballs on our educational platforms and off the TV.
Right.
Yeah. Well, obviously, we're not going to do a breakout room now. This is the breakout room. What other objections are investors? Are you facing from investors? I mean, I'm sure all of you have deals. What other things? The election, I get it. But what other things are people facing?
I'll throw in. My hardest part is that when I invest is when others don't want to invest. And so there's always some type of stress. We're at the bottom. Things have changed. Things are on sale. It's not popular. And so as I step into it, it's always coming back to fundamentals and being able to explain to those individuals why is now the right time. And it's the old adage that when the stocks are soaring and everything's great, everybody wants to buy it. And when they go down, nobody wants to buy it. And I try to do the reverse. So the hardest part is I'm always searching for money when people don't want to give any money. And that's the first obstacle I've got to overcome is why now?
Well, where's your money now? If you're fearful right now, and you're trying to stay on the sidelines to see what's going to happen, where is your money? Is it in a checking account, a savings account, a CD? You're just remaining in stable stock. Where is the money? And money is
it's usually sitting in cash.
Yeah. So to me, I would be like, okay, you're really risk averse. I'm going to try to find, maybe I don't have an offering that would fit that risk profile, but someone else on Investor may. Edwin may have a debt deal that's at 50% in a location that anyone would be interested in doing. Look, if you're interested in earning, instead of 0, or if you're in a CD and 3%, you want to earn 6, can we put you in this kind of investment? Just, to ride out the storm while you're trying to figure out what's going to happen. I want to do anything I can to give them some kind of benefit and to get them to invest with me. And regard long term, I just want to get the investor. I want to get their money off the board before somebody else takes it.
Right.
So,
I just had a thought, guys. I think it would be really cool if either individually or hopefully collectively, collect a bunch of little infographics and a half-page, visual things or a half-page email to overcome common objections. I heard 2 ideas right here. Oh, okay, what happens if a Democrat comes into power? Jim mentioned the infographic. And you talked about, hey, they're keeping it in cash. Well, I'm sure there are tons of infographics out there which show the power of inflation eating away into cash. I think if we collaborate and just contribute infographics, we don't need to steal anything. We can always point out the source where it came from. Then people can just say, oh, okay, somebody mentioned in cash, okay, show them this infographic which shows how your money dwindles over time, keeping it in cash. Just a thought.
So I'll do another thing around that, Badri, which is how can we help each other get more exposure? We could put out information like this as a investor, and then we could link that to all of the fund managers and have backlinks, everyone comment on it, and hopefully get more eyeballs to you in addition to the post. But I would say we need a common, if all of you are making social media posts every day, we need a common hashtag that all of us follow so that we can each try to make sure we're commenting on that hashtag to drive the exposure for each other. So there's 100 of us. If we had 100 comments, look at all your social media posts. How many of them have 100 likes? How many of them have 100 comments? I'm going to venture to say, I don't care which marketing agency you're using, not very many of them. But if we're if we're spending time on social media anyway, we might as well try to do it to the benefit of every one of us. So I would say follow a particular hashtag, whether it's investor, whether it's fund manager, some unique hashtag, and start trying to comment on other folks' posts and have them comment on your post. And I would say the same thing about your websites. I know that backlinks are extremely powerful. I don't know how to use them. I'm trying to figure it out. So if anyone else is interested in that, engage on Slack, and let's figure out how to do that so that we can drive traffic to your website and to our website. Oh,
that's a great thought, Jim. I think we'll also put some thought together. So maybe a couple of common hashtags. I don't know, Avestor Fund Manager, not so much as to promote Avestor, but really, so at least it's a common group. And then you put that in all your groups. Yeah. So.
Yeah, promote everyone.
So another thought on the same thing, extension, right? So the infographics earlier you mentioned, right? Maybe we can put a bi-weekly meetup kind of thing, like informal come and discuss on this topic, and then post the informal graphic and put a Facebook group or Facebook Live and attract people. And then in the same thread, you can everybody repost it or tag it. That way you create your own buzz and marketplace for all these 100 fund owners.
Sridhar, what do you think about if we had a mastermind just for LPs and everything an LP investor should ask that sponsors never tell you?
And that's fantastic.
And do it in conjunction with this, either 30 minutes before this or 30 minutes after this.
Yep.
And make it part of this time frame. Just make this time frame 30 minutes longer. Yep. And you can have 100 fund managers ask all the questions that no other sponsor will answer. And just
are you thinking of inviting LPs to this, or
only LPs?
I see.
Make it LP specific, and not specifically to try to get more LPs in our deals, but just to get more exposure and do something that no one else is doing. So I think that's something no one else is doing, and something that would be a huge valuable asset that we could concentrate. And because we're not talking about our deal, we don't need to be defensive. We don't need to think about, well, I want to be careful how I answer this because they may not invest with me. But instead, collectively, you've got a bunch of experienced people that say, look, if I were you, here's what I'd be asking. If I were you, I'd be looking at this. Here's some of the things that are going wrong in the industry right now. Here's some of the things that we're seeing in deals that we're concerned about. Here's things that we think everyone is overlooking, and we're excited about these things that we should be doing.
Okay, the Passive Pockets is doing this, it seems. But in any case, we can put it on the Facebook Live. That way you get thousands of these things rather than limiting to one small area. I think we should put either YouTube or Facebook Live. That way you can get a lot of new investors, and then with no obligation to buy anything, no obligation to learn about individuals' deals, just a pure knowledge-based one. That way we all can get familiar. Since we have 100 fund managers, even if
300, 300.
300, okay. 300
I'm excited about
You're growing leaps and bounds, Badri. That's good. Okay, so even each one or two present in that Facebook Live, right? Even if you put a weekly call, then it takes months, and then that gives a big clout.
Also, Badri, I'd suggest if it's something you guys are interested in, I would suggest that we do it before instead of after, so that the fund managers should see this as an opportunity. And I would share everybody that joins that call. I would share that list with all the fund managers, so they have the opportunity to build their database. But more importantly, I think that more fund managers would show up if they think they have a chance of getting some new investors by seeming to be an authority platform.
I'm a little worried that fund managers might think that other fund managers are poaching on their investors. So again, propose it in Slack, and that's the
it's this recording is going to be posted, so we can just reference the recording. Anybody that's
we can reference the recording, but sometimes people don't watch the entire recording. I would propose the idea and then see how much. I'm open. I mean, it just depends on whatever works, right? I don't know what will work and what won't work.
So anyone that's concerned about that, I would only say to you, if you think your investors are not out there already looking for answers, then you're naive. They're already out there. So it'd be better to keep them in our ecosystem than let them go to someone else's ecosystem or Facebook group or whatever to try to find these answers.
Yeah.
I think Pace Marby started like this, and he has like 20+ million followers now. Yeah,
he does. Yeah, Pace Marby, Cody Sanchez. I mean, a lot of lessons to be learned. And I'm very aware of Passive Pockets acquiring left field investors. Left field investors do have a fund on our platform. I did talk to the Passive Pockets people in bigger BPCon. I actually went to BPCon this time. But just because somebody else is doing it doesn't mean that we don't have to do it, right? I mean, there are opportunities for multiple forums out there. So
Yeah,
we can put that in the fund context, whatever content they have, we can put it in the fund context, and then even give the profiles of fund managers and what kind of investments they do, etc.
Yeah, trust me when I tell you, you could put in a room every single person who hosts a podcast on Bigger Pockets, and every single person that is one of their stars, if you will. It won't have as much knowledge as the 300 people we have on the Avestor platform.
Yeah, we just need to figure out how to tap that collective knowledge.
Yeah.
Hey, great comments. Certainly encourage the discussion on Slack. We'll also think about it. I'll debrief with Sanjay and Chirag too. And we are continuing to work on doing internal connections. We already talked about that in the summit. We'll be rolling out that feature where you can interact with the sponsors based on asset class and location soon in the platform. So,
Badri,
any other final comments or anything else anybody wants to share before we wind down?
Badri, you mentioned that you have 300 fund managers, right? Without going much detail, is there any way you can give like a high level what each fund manager is, what their fund seeks, type of thing, like a summary?
That's exactly what that's what we are adding to the portal. So you can go and say, I want to find all the fund managers in Texas and then see their profile.
Yeah.
Now, we will put some information in the profile, but it's really, we'll give you the ability to edit your profile. You need to add more information. Yeah. So we are working on that. So very good. Thank you all. Great discussion. And it was good to have Richard over. Stay tuned, and we'll have a lot more interesting things coming up to the mastermind. And remember, just as a reminder, we are going to decouple the deal sharing, and that will move to Thursdays starting from January. And the mastermind will move to 9 o'clock, and we'll share all those details. Thank you all for coming, for staying till the end, and we'll talk to you guys later.